All right, boom, guys. We should be live here. So I just wanted to go ahead and kick things off by saying, as always, what's going on, everyone? My name is Nicholas Merton here at Data Dash. And as you guys can tell from the title, I'm going to be doing a little bit of a live stream today. If you're watching this later, it's no problem. In this case, it's going to be just as relevant for you guys, discussing about the brutal downturn in cryptocurrency markets that, as per usual, comes out of nowhere. The market's riding in green. It feels good. The going gets good in this case. It seems like nothing can go wrong. And then boom, you get a major sell-off or flash crash, or what would typically be seen as a flash crash in most markets. So I want to go ahead and talk about this because the underlying reason for what actually causes this sell-off, albeit it may seem mysterious, there's no headlines talking about anything that tragic has happened. Has the technology of crypto broken? No. None of that has actually happened. It has purely to do with the basically accessibility of credit in this market, or the ability to borrow in the cryptocurrency space and take excessive risk. Think of it as basically turning crypto into nothing more than a casino house. So I'm going to go ahead and actually talk about this in realistic terms, how you can avoid being the people who lose it all in this case when it comes to these sell-offs, how you can actually use these sell-offs in dramatic periods of overt greed and exuberance in the market to your advantage. And again, just fundamentally explain why this is happening. Because I think when there's any sell-off in the market, we want to know what's happening. So if you guys like the video, please consider dropping a like. Let's go ahead and dive into it. So just to step back here, this is the 5-minute chart. It makes it look like a doomsday scenario for Bitcoin. And it definitely is a bit concerning or scary when you see it. No matter if you're looking at the 5-minute chart, you're looking at the hourly chart, you're looking at the daily chart, this is obviously a pretty big anomaly. But I want to go ahead and before we even dive in anything, take a look at this daily chart. And every time you step through the long-term time frames, take a look at the weekly chart. Take a look at the monthly chart. Go ahead and put on the logarithmic scale. We're okay, right? And along with that as well, the drop here in total market cap went down from about $2.4 trillion down to $1.8 trillion, a total decline of almost 25% in a matter of a couple of hours. And now we're back up here, similar to Bitcoin, only down around 13%. So in the sense of price action, nothing too incredible to panic about. And for perspective's sake solely, again, we can kind of get caught up in the party as the punch bowl is full, everyone's having a good time. We can forget and lose perspective that this is where we were in total market cap back on September 1st. Or in the case of Bitcoin, so we go back to the shorter term time frames, it's right where we were back on September 1st. Same exact date range against total market cap. So let's go ahead here. Let's talk about why this happens. There certainly isn't any real headlines in this case. If you guys go through and look at CoinDesk or Cointelegraph, they're going to tell you, in this case, or any of the major publications, no hard feelings towards them. They'll try to find some reason for why it happens. And it's not some macro element or factor news event that happened that causes this. It's a couple sellers on the market, some whales, large investors coming in and selling their positions. But they're not the issue that I'm here to talk about here today, because it's what happens after they sell that really is the issue, and who's responsible for the exuberant excess in sell side pressure, but also on the buy side. And that has to do with derivatives, leverage trading, borrowing crypto with crypto collateral in order to go out and speculate more. What I like to basically reference as leverage trading or trading on margin. Now, we have talked about this a ton on the channel, but just to prove the point here of why the sell-off is so dramatic, take a look here at a summary since back on June 10th, right? The entire summer in this case, where crypto markets were relatively quiet up until the mid part of the summer, mid-July, and started to rally up higher. Notice how the green bars and the red bars really don't disorient too much until about today, where you have a $3.2 billion set of liquidations on the long side. That's not even including here in this case the 360 million who probably tried to short the market on the way down and got knocked out as prices bounced back up, right? So in this case, just so you guys understand full context here, this is billions of dollars of value being stripped from investors just like that, right? So when a couple whales come in the market here, they're knocking out a ton of people and leading these investors or traders, let's call them what they are in this case. You guys might be a part of this or have it as a part of your strategies. I, again, don't use leverage in the sense that most people do in the market. But you can see here that a lot of traders are losing everything in their positions. If you were in a leveraged long in this case, and to kind of explain it as we go throughout this video, if you had, for example, borrowed capital that isn't yours from the exchange, and you pay probably some kind of interest rate on it to borrow it like you would with a normal bank loan, you, for example, might be trading on 5x margin. Might seem reasonable. If Bitcoin goes up 20%, you double your money. Sounds great, right? Well, it also means that if Bitcoin, in this case, goes down 20%, you're going to be losing your shirt in this case. You lose all your underlying principal. And in some cases, liquidation can happen even sooner for protections of the actual depositor who provided the crypto to you in the first place, to the exchange or the facilitator in this case, right? So you're risking losing it all if there's a 20% decline. And that's exactly why we see this domino effect pattern. If you dive here to the 5-minute chart, I usually don't like to look at the shorter term time frames. We can dive in here into the minute chart, and you see just how fast this happened. Bitcoin, which was easily standing around $50,000, going down to $43,000. Now we got to put it out there, how the hell does that happen, right? How does that decline so quick? Well, it's because just when you got a 3 or 5% correction, which is very normal, it's not only probably healthy, but it's expected in crypto. What's happening is you're reaching the liquidation point for some investors, whether that's those who are trading on derivatives platforms, whether it's those who are borrowing crypto through platforms like Celsius, Nexo, BlockFi, you name it, the people who are creating that yield for depositors, they're getting knocked out on their trades. They're having a margin call as a warning, and if prices decline enough, there's a liquidation event. They sell the underlying collateral, and that causes additional sell-side pressure because guess what their collateral is? It's cryptocurrency assets. It's Bitcoin, Ethereum, you name it, Litecoin, any kind of cryptocurrencies you can think of, right? And that is causing this domino effect in price, where eventually you get to a point where you've got some institutional buyers, traders, speculators who come in and they shove the market price upward. They clear through an already thin order book, right? Because there's no real sell orders there usually in this price territory. It was usually above the price for the asks in this case. So that's exactly how things work in this case in regards to price. But I want to go ahead and actually visualize it here. Now, this is something I have yet to really draw and visualize live. But, let's just go ahead and give it a shot, right? So let's go ahead and talk about how this actually works. The important thing to understand here is that when we're analyzing how leverage distorts market, it's all about the perception of the value of your collateral. So let's say, for example, we want to go, and this is not me bad-mouthing Celsius. I love Celsius as a company. We work with them, but I just want to showcase how this can actually work through an actual borrowing platform or through many of the other leverage trading platforms that I can tell you guys, many content creators are promoting you out there, and I would advise you guys not to follow people who are promoting that to you. Just going to go ahead and share my candid opinion. Nothing towards them, right? They get to make their own decisions of what they want to talk about. I won't be promoting leverage trading here. So let's say, for example, we'll actually go ahead and we'll just talk about your average leverage trading platform, right? Let's go ahead and let's say we've got X, Y, Z exchange. You guys are going to have to excuse my art skills. This is a cryptocurrency platform that allows you to take your existing one whole Bitcoin. You've got one BTC here, and we're going to go ahead and for simplicity's sake say that it is worth at the time, right? And we'll maybe say this is, we'll use today's date, 9/7, right? 9/7, 2021. So you've got the date here. I'm signing up for a new exchange account on XYZ, and I've got one Bitcoin. But you know what? I don't want to take my existing $50,000 with a Bitcoin and just hold it. No. See, I want to become a millionaire overnight. That's the objective in this case, as everyone's promoting. It's so easy to supposedly do, right? Take my $50,000 of the Bitcoin, right? So if I want to take my $50,000 of Bitcoin and I want to become a millionaire off of, a much shorter price move in this case, right? Maybe let's start off with a more humble goal in this case. Let's say I want to get my wealth to be 10 times as much as it is now if Bitcoin doubles. Rather than just doubling my money to 100K, right? That would be the initial amount if Bitcoin were to move, BTC, right? BTC, we're playing Bitcoin to go up 100% or 2x in price, right? So that's our goal here, our thesis for our trade. We would generally just take our 50K and it would turn into 100K on paper and wealth, right? But we want to get up to 500K. It's a pretty noble objective. So what are we going to do? Well, if we want to reach 500K, we're going to have to multiply our leverage, right? So we're going to take our $50,000 worth of Bitcoin or 1 Bitcoin here. We're going to multiply that by 5x leverage. Okay. Now, I want to explain why this is important or why I need to do this here in order to do this if I only want to expect 100% move where I can cash and make profits. Because what I'm effectively doing with this 5x leverage is I'm going to be taking my original Bitcoin and I'm going to basically turn it into a position of 5 BTC. Right? Now, how I'm doing this is from the XYZ exchange or platform, I'm effectively borrowing 4 Bitcoin. And I'm going to pay some interest on top, like a small amount to borrow. That's not really even our biggest concern here. We don't really want to care about that because we're doing this, we think Bitcoin's going to double in the next month or something, right? So let's just say we've got our 5 BTC here. We've got a much larger position. This means that the increases in price for Bitcoin, a 5% move, or maybe for example, like a 20% move would have given us 10K in profits. We now have $250,000 worth of positions, and therefore a 20% move is going to be much larger. Right? It's going to be 50K in gains on paper. Right? So we're happy now in this case. We've got $250,000 worth of Bitcoin we're trading with right now. We're taking more higher stakes here. We're ready to go. We're solid in our position here. And it just sounds great because now we've got supposedly a quicker way to make it to that target of 500K and therefore maybe eventually $1 million. We're on the road, right? There's no problems or risks, right? Actually, there is. And actually just, I deleted the page. So that looked very dramatic there. Basically, I apologize, guys. The page goes black when I actually switched over to the full camera. So I guess you guys didn't see that. But the point of it is that there actually are some risks. And they're not usually transmitted as much as the upside that traders or investors can face. So let's go ahead and actually clear the board. This is good. Let's go ahead and talk about what can happen. Now, if the market were to just keep going up as every investor estimates, then boom, you might actually reach your 100% target, your 100% gain in Bitcoin's underlying price, and your money really could go up all the way to 500K on paper wealth. But I'm going to be honest with you guys. With the intermediate volatility in crypto, there's a good chance you're going to get affected by this issue I'm about to mention. And then also, even if it's not that, you have the kind of flash events that are completely unpredictable like today's, where you get liquidated. Now, how does it actually work? So you really, at the end of the day, even though it says your position is, $250,000 of the Bitcoin or 5 BTC, right? So we got those 5 Bitcoin we talked about. Using this little line here as kind of a separator, right? So we've got $50,000 underlying, but our position reads that we have 5 Bitcoin. We actually don't own 5 Bitcoin. All right. Now I'm going to talk about why this is. Because our real underlying position, the exchange isn't just going to give us ownership of this money. We're borrowing it. So if the 5 Bitcoin that we're holding, which is originally worth $250,000, right? Let's say this is the Bitcoin chart of time. It started off here at 250,000, right? This little price point here is 250K. We might be up in the green. It might be bounced up to 300K. But if price starts to not go in our favor and go down below the area we entered in, this is going to put us further and further close to a potential margin call. Now, what is a margin call? This is when the XYZ exchange is coming in saying, hey, Nick, our good friend, look, your underlying collateral, which was originally worth 50,000, is getting close to being worth 25K, or basically is getting close to a point where we allowed you to borrow 4 Bitcoin, our underlying depositor's capital. And to be fair, you're almost impending on a $50,000 loss, right? And you only have $50,000 of underlying collateral that's actually depreciating in value as well to back up for that borrowing that you're doing. So look, unless you add some more crypto soon, we're going to go ahead and have to sell your underlying position at a 20% downturn from when you entered into it. And that's exactly how these platforms work. It's how more established platforms like Celsius and BlockFi and Nexo, where you're borrowing actual underlying crypto, in this case with your crypto collateral, will do it. And it's the same how derivatives platforms are going to work, right? So this might be, for example, maybe a 15% decline, maybe 10%. They'll say, hey, look, you got to add in some more collateral. Here's the bad news. Unfortunately, most people who are going to leverage trade are going to bet it all. They're going in big like they would at the casino. So what they did is they used all their underlying $50,000 or 1 BTC in position. And the problem is Not only is their collateral dropping, in this case, they're making a realized loss with the larger portion of their borrowing. And if that gets down to 20%, right? Excuse my poor drawing here, right? 20%, that 50,000 is no longer yours. Sounds pretty crazy, right? All those dreams about getting to 500K, just like that, it was so close. But now, it's gone. I love how I'm hitting the delete button and it's like syncing up here. This is perfect. But look, in all seriousness, guys, you can see why I'm maybe a little bit fiery about it. I usually do not get emotional about things. I even tell you guys to not get emotional about crypto. It's probably the last thing you want to do. But man, I have to say, guys, there's a responsibility for us as content creators. People use the term influencers. I really don't like that. But in a sense, we are going to have weight on where things go in the market and how cryptocurrencies play out as a whole. And I got to say, guys, there are a lot of people who, whether they know it or not, are promoting these kind of platforms, these predatory platforms that are taking away money from people worse than a casino does, right? And the thing about it is they'll say, people understand the risk. And look, as much as the next guy, I kind of can agree with that libertarian philosophy of like, look, everyone should have the freedom to do what they want, right? But there is a clear lack of education and barriers to entry that are necessary before people participate in this. And I understand in a reasonable fashion why regulators actually don't want people trading crypto derivatives, because utilizing leverage in markets is understandable to some degree. If you're using it in equities, if you're using it in, for example, Forex markets, it's kind of a given in Forex markets. Trading spot Forex is not really going to yield you much. That being said, in crypto, you can have 20% drops in a single day because of how excessive leverage is in the market and how excessive credit is. After just having a simple 3 to 5% drop, it spawns a domino effect. In Forex markets, you really don't get 3 or 5% spreads. Equities, yeah, you don't get it in the broad indexes usually. If you do, it's a historic event like what we had with COVID back in March of 2020, the March flash crash, which was one of the worst sell-offs or fastest sell-offs we saw since the Great Depression and the pop of the stock market boom 100 years ago, right? You just don't get those kind of moves. And the collateral is not in the underlying asset in this case. And that's why you get this domino effect that you just don't find in other markets. And now you can see, right, as a lot of people are flooding out of the market, they're like, oh my God, I'm selling my positions, right? That's the last thing, in my opinion, that one would want to do, because you get buyers coming back. And look at that, you get much more towards a reasonable zone here, right? We're back to $47,000, just $3,000 really from where we were back here earlier this afternoon, right? Setting those higher lows, and we're going to start setting those higher highs most likely. But I want to go ahead and talk about the unfortunate scenario again. Look, if you guys are down on paper today, I'm right there with you. It stinks to see downturns like this, but I also realize as well that probably many of our portfolios have doubled, possibly even tripled since back in July. Pretty much a little over a month. I think we can understand and accept a few corrections there. The people who are really losing it all, who are feeling the pain, are those who used excessive leverage and lost everything. And I always want people to think about that, because it not only shows that, hey, in this case, if I'm not leverage trading, I'm on the better wing in this case. It's a dip. We'll recover in this case most likely. Crypto is always generally set in higher lows and higher highs in long-term time frames. But what no one can afford in this case, especially if it is your lifeblood investment portfolio into the crypto space, you're starting to crypto, is to not afford to make those mistakes. Those mistakes of investing everything off a leverage bet with money that isn't yours. Now, I will share something with you guys for full transparency. You guys might remember there's a good video you can watch. It's my crypto thoughts that I posted back in May. If you scroll through my videos, you'll be able to find it. And what I talked to you guys about is how I took for the first time my actual first loan in crypto. Now, I know you guys are going to say, wait a minute, Nick, this is a bit hypocritical. How did you take a loan in crypto, and why did you do it after all this ranting and raving you're doing? Well, the reason why is because I, in this case, am going to do what's best for my portfolio and my risk tolerance, right? And I know very clearly that the best time, if you are ever going to borrow, because I know some of you will, right? If you guys borrow or take out leverage, the best time to do it is not at all-time highs in the market when your collateral is very, for example, maybe you have, I'll give an example. Let's say your collateral is worth $100,000, your portfolio, right? You're riding high, it feels good. That's not actually the time to use crypto collateral. The best time if you were to ever do it is when you're in corrective price action. When you're down 50%, you see that market price is starting to get some buyers coming in. Now, why do you want to do it? Because your collateral, let's say it goes down to 50K, you can't borrow as much. Well, you also have a much lower liquidation risk. And that is the key that people miss when it comes to margin. So what I did in this case back here in May is I took out a loan in this case. I bought more crypto. I'm transparent with you guys about this. I took some more, I basically locked up some of my crypto. I got stable coins and I bought more of my positions, right? And the reason I did that is because I was doing it at an optimal time. The second thing as well is I had additional collateral, didn't go all in, right? Not going all in on extra crypto, no. I had other collateral on the side and I knew the risk I was taking. I could easily model in this case from when I entered what risk I was taking in my positions. And that's it, right? But I will tell you guys this today. Just because I'm doing this in this case, right? Just because I took that position back in May, I want to be very clear to you guys. On this channel, I will never, and I'll say it here today, I will never stand by you guys going out and borrowing to basically take on excessive risk, nor derivatives trade on excessive leverage. The worst you can do on a platform like, a borrowing platform like BlockFi, etc., is you can borrow generally probably about a 2x leverage, right? That's for the most part. But on these XYZ exchange platforms, and I can name a few of them, but it's anything with derivatives or perpetual contracts, no need to name names. If you're trading on those with leverage, know that you're facing excessive risk of losing everything. And they may not tell you that. They may have it in the fine print that they probably know you're not going to read, but that's the reality. It's the thing that many influencers, many crypto personalities who are making a lot of money off you getting liquidated on these platforms through their referral links, they won't tell you. So I'm sorry, guys, to get fired up. And I'm not here to act as a, not just a per se voice of reason, but like the overarching voice of truth. But derivatives are not only inherently risky, day trading is inherently risky. And that's what you get here. You get people day trading, swing trading on excessive leverage. It's not good. It's not good, guys. So anyways, I thought I'd go ahead and maybe open up the chat here, see what you guys are saying. I'll go ahead and just check the chat feed here. Someone, groins in this case, probably a really good thing that'll hit you. It'll hit you in the groin. He said, try to log on to an exchange. Let's say this, guys, for example, another risk with derivatives. As I mentioned earlier, you might even have the additional collateral on hand, but unless you got it in the exchange in this case, and they may not even have an additional feature where they'll take your collateral. Now, think about it this way, like you can't log on to your exchange. The exchange is down. Let's say everyone's trying to trade at the same time. Oh, servers are down. You may even have the additional collateral, but unfortunately, you can't log in to add it and deposit it, or maybe deposit it in a time and boom, you lose everything. That position you might have been up in the green in, you might have been feeling riding high. Unfortunately, you get weighed down by the same thing that weighs down everyone, which is these random sell-off events in the market. Plain and simple, right? I want to make sure I got my, okay, so you guys can see me good. All right. Let's see here. Yeah, and again, this is the kind of full proof here, guys, of what's changing our markets. We used to never have this in crypto to this degree. Derivatives didn't make up as much of the crypto market as they do today. So it's a really tragic scenario, unfortunately. All right, let's see here. I'm going to go ahead and scroll up a little bit here, see if I can respond to some good questions here. BB Junkie, question is, will Nick hit 1 million subscribers before Bitcoin does? I appreciate it, BB. If you guys haven't already, I always appreciate if you want to subscribe. Yeah, I mean, look, the biggest thing overall, whether you guys just watch this video or you stick around for the long term, my goal in this case, right, at the end of the day, there are coins I like, there's things I talk about, I take in some degree of risk, but I almost kind of want you to think about it. Like getting into crypto as risky as it sounds to a lot of everyday people, it's down here. This is like an emerging market that is set in multiple higher lows and higher highs in the long run. And it, on a sense of markets scale, has a lot of room to grow, right? But your risk of just investing in crypto is like down here. And then you've got an exponential chart, like a real S curve when you start implying leverage into the market. And yeah, of course, maybe you can say in this case, yeah, I've got to maybe increase chance of making a little bit of extra profit. But in reality, more likely than not, statistically speaking, this isn't just me being biased and trying to shut people down. Day trading, you will generally lose money. Leverage or margin trading, you will lose money. It's a proven fact in crypto. It's why these exchanges who profit off of derivatives platforms are so profitable. So Matt's saying that I have zero evidence for this. Curious to hear how that's not evidence because we could see the liquidation numbers earlier, but okay. I'm always open to feedback, guys, but this is, there's nothing else to markets at the end of the day. It doesn't matter if you're talking about equities, it doesn't matter if you're talking about anything. Markets are not purely fundamental at the end of the day. That's the thing that a lot of people don't get. It's why you can have a company with great sound financials. The asset price doesn't move up to meet to those fundamentals. A company who's burning through cash can be soaring really high. Markets are purely about inflows and outflows on the spot market determining price. And along with that, other things around it, derivatives markets, credit, margin, that can exacerbate those spot moves. That's purely all that markets are. And anyone who tells you that, oh no, there's some event like people are scared about the regulators or this or that. Look, you can have any kind of headline you want to toss at it, but it is always going to be who's selling and how much, who's buying and how much. And with that, if you get more inflows, price is going to generally go up. And if you're getting more outflows or more sell side through market orders, that's really what kind of determines the direction. Then in that case, if it's more on the sell side, the price is going to go down. And that's what happened today. Unfortunately, it takes just a little bit of whales, a couple of large investors in this case. It used to not be like this. That can lead the market to go down 3 or 5%, which really isn't a worry. And then it leads it going all the way down to 20% because traders who are on leverage are falling over each other to try to protect their positions. And unfortunately, they just can't, right? Because they usually end up taking too much risk and they don't have the additional collateral to protect themselves. Okay, sorry. Let's see here. But I'll answer a couple more questions here. Andy, I appreciate the donation. I don't know exactly what it's referring to, but yeah. Anyways, guys, let's go ahead and pull up the chart. Enough of my face here. I know you guys don't want to see too much of me. Actually, someone was talking about bringing up their perpetual contract price. Let's go ahead and take a look at Bybit here. Yeah, well, it looks about the same, but it went down even further. It's further evidence here, guys. Like you can see. Look at the volume here traded in 1 hour, 4.436 billion on Bybit. This is one of your many players here, right, in the derivatives platform space, right? And again, like there's a lot of people, guys. Like I can't tell you how many people I've seen where it is in the United States, like you're not supposed to be participating on centralized derivatives platforms, who are saying, oh yeah, use a VPN, do this and that. Guys, I'm not going to be promoting that here on the channel. Like. I don't think people really understand like what they're pursuing people to do. Imagine if for a moment I had like a casino as a sponsor. Like it's just again like I'm not here to do that, guys. Like to risk what might be one of the greatest financial opportunities of our lives, a major transformation of generational wealth. From the older generation to a younger generation. I think it's a huge opportunity, and to throw that away with the risk of making maybe a little bit more. Or even a lot more, right? I don't know. I think of it akin to like taking risks in life, like drinking and driving or doing something terrible. It's not worth it when it comes to crypto. So let's see here. We'll open up the chat one more time. Maybe we'll take one more question here, and then we'll maybe close off for today. I apologize, guys. I'm not doing too much questions. More of a kind of late update. Yeah, so this is the interesting thing, like as I got from Tim, like still no explanation of why the market dipped. The crazy thing is, guys, that again people won't talk about is that there doesn't have to be a reason. It could literally be, let's just say hypothetically, as a fun joke, right? Because I think we all like to imagine that we could be crypto whales in this case, right? So let's say, for example, I'm a whale in this case. Let's say I got thousands of Bitcoin hypothetically, right? If I go on spot market today, if I go on Coinbase, and I just literally sell all those thousands of Bitcoin, what do you think it's going to do to the price? What's it effectively doing? Well, it's taking my request to route 4,000 Bitcoin into bid orders, right? These are people who have agreed to buy Bitcoin if the price offered is at a certain price range, lower than the market price. So that's what's part of the order book, bids and asks. All these bid orders, and you'll see it's like a mountain in this case, or actually, as you guys are probably looking at me, it probably goes this way. But you have the mountain of order book orders in this case on the bids, and they're waiting for price to be offered at that. And I'm saying, look, exchange, sell my 4,000, 5,000, whatever Bitcoin hypothetically, and I want you to sell it at whatever price. Now, if you're selling like one Bitcoin, you're not going to dent the price that much. Maybe a couple cents, maybe $1, nothing more than that. You start selling thousands of Bitcoin, you get this kind of sell-off, and then the liquidations kick in, right? So you can see here, right? This is a great example of actually how to kind of determine this from the chart. When do you guys think? And I'm gonna ask this as a little quiz for the chat here, because I want to get everyone thinking a little bit for themselves. I don't want to just, loudmouth and share my only opinion. Curious to hear from you guys. Where do you think in this process, and you can see the timestamp down here, maybe paste the timestamp in the chat, guys. Where do you think around this entire process the derivatives started to have margin calls and therefore liquidation events? So the borrowers on crypto platforms, where do you think that happened? Where was the separation between a couple whales selling versus the liquidations, the domino effect? I'm curious to hear from you guys in the chat. I'll give everyone a minute. Just make sure if okay, so we got some people coming in here on the chat. Someone said around right here around 10. See if anyone has any other. So generally people are saying around 10 in this case. Someone said around 6. All right, guys. Some good responses here. I had a little bit of a delay. Someone said 420. Yeah, guys, to be completely honest, those of you who said 10 are about right here. This is where the liquidations kicked in. Because what you had here is a complete shift in the momentum. If you just literally take like this segment here, you can obviously tell from here to here, downward decline here. You got some whales starting to sell off positions, causing that, as I mentioned earlier, around like 3 to 5% correction. Some you see around 4% in this case, right? Very typical stuff, right? And this is very, very common within cryptocurrency markets, right? To see this kind of stuff happening. But then you have, in an even shorter window of time, a fraction of the time, a 16%, I'm sorry, I'm going to use a different tool here, the line tool like we were using. A massive decline in less than an hour that is 3, 4, 5 times as severe. That's the liquidations. That's my evidence right there. I don't need to know who they are. I don't need to know where they live. I don't need to know what their story is, how much they got invested in the market. Unfortunately, that's what's happening there in the market. And it's a tragedy. It's a tragedy because those people, what they could have done is literally two things. One, they could have bought on spot and probably contributed to the price appreciation, in this case of Bitcoin, the limitation of supply, and added to their existing stack. They had to have some collateral to trade on leverage. And then outside of that as well, overall, they wouldn't risk losing at all. Bitcoin could literally drop 80%, right? They could buy at the all-time market high, but they'll at least still have their Bitcoin. And outside of that, an opportunity eventually a year or two out, if we were really in a bear market, for that capital to come back, right? So again, just wanted to test that with you guys. I'm very happy to hear the results of what you guys are saying. It's around this 10-minute mark. You can see the divergence here. It's not whales just flooding out of the market. That's only a portion of it. Wanted to read a quick remark here. We had a donation come in. It said, Nick, your level-headedness is always refreshing. It's hard to resist FOMOing in and out of the market at times, but your calm logic and analysis is great. Thank you, Arshavas. I appreciate it. Appreciate it, guys. Alrighty, well, guys, I think this is it for the live stream. I unfortunately, like any other day, I got a lot of work to get to and stuff outside of producing content here on the channel as well. But I want to say to you guys, thank you for watching. And as tidbits here towards the end, if you guys could drop a like, subscribe, it's great. But even if you don't do that, consider this. In the crypto market, it can be quite volatile and scary. Declines can lead your portfolio value to go down, but you won't ever lose it all with crypto. On the other hand, with leverage trading, you can lose it all if you don't understand how to properly use leverage and don't understand the full scale of risks that you're facing. So anyways, guys, that's all I've got to share here. I don't have a referral link to share with you guys when it comes to a leverage trading platform because, quite frankly, I don't think it's worth your time. And that's the one thing I can't control. So anyways, guys, have a great rest of your day wherever you are. Don't lose any sleep about this. If it makes you guys happy, one thing I didn't talk about that is the case. I've been adjusting my portfolio. I'm in the market just as much as I was before. Unfortunately, on paper, it's just not worth as much. All right, guys, take care, and I'll see you all in the next video. Have a wonderful rest of your day, everyone.